that gold and silver are the most liquid assets because they're very easy to sell. It's going to be very hard to sell these other assets in the future, especially as we head over the energy cliff. And so I think this is one of the last slides. This is what it comes down to. I just updated this. The global identifiable physical gold and silver, there's about 2.5 billion ounces of all the gold investment. That's central bank, and that's also private investment. And there's about 4.4 billion ounces of silver, maybe more, maybe 5 billion. And that's ETF, that there's not much central bank silver. And then there's a lot of held privately, especially in the last 15 years. A lot of coin and bar has been purchased and held by the public. So this is all there, 4.6 trillion of gold and 97 billion of silver based on current values. Again, when investors start to move into this limited supply, even though there's scrap that could come on the market, even if it doubles to 10 billion ounces of silver, and we can go up to maybe 3 or 3.5 billion ounces of gold, that's still not much at all. And so I think this is the issue. The next phase of the bull market in the metals is going to be when the world understands the dynamics of the energy cliff and the impacts it's going to have negatively on most asset values. They're going to have to move into precious metals to protect wealth, and there's just not much of it there.
I've heard that the total amount of physical gold is like 10 trillion. Is that like adding like jewelry and other gold outside the investable and central bank market?
Yes, there is a lot of gold jewelry there. A lot of that is in India. A lot of it is, but even if we see 10 trillion, again, it's the problem that the world is facing is there's just not enough good liquid assets. And the market forgot about it because we placed our faith in these other assets because, people get into real estate. Real estate has been a proven asset investment. Real estate prices are always going to go up. Well, no, real estate prices are going to start coming down, and they're only driven by energy growth. And so, you look at a typical suburban home, I don't know wherever you live, it needs a lot of energy. You've got to maintain it. You need constant amount of energy, not only to have the economy around a home, to support a home, but to support the house economy. You need energy, you need to maintain, cut grass. It takes a lot of energy to keep that house giving of its value. And so we don't realize this really does change, unfortunately, as we get into trouble. We move into energy scarcity, and that becomes problematic to the world. And the world, the light bulbs haven't gone off yet, but they will. I would say in the next 5 to 10 years, more light bulbs are going to go off. And so when you see the last chart, but when you see the chart of Tesla, people go, oh, I wish I got into Tesla when it was here because it went to here. They're going to say the same thing about the metals. And it all comes into conclusion. It comes to this. If you look at the world debt in 2005, it was 127 trillion. I think in 2008, it was 150 trillion. It doubled since the financial crisis. And what was that due to? The decline in the falling energy return on investment. This is the world's way, the central banks and the world's way to offset the falling energy return on investment. And then we've added all this debt, and now interest rates are going up. We can't even service this debt. And so it becomes a snowball, but we've been managing this debt because we've been able to increase oil production. When you can't increase oil production, all this leverage, as you know, the derivatives, all this leverage gets into serious trouble.
So one could say that the prospects for the world, not just the West, but even China, Russia, it's not very good. But at least we can, as individuals, protect ourselves with gold and silver as an investment. And how do you see the world? I know you look at energy and investments, but any views on how the world is going to look, let's say, economically, socially, and politically with what's going on? Because from what you're telling me, and I'm not surprised, it's the decline of the Industrial Revolution. It's the end of it.
You know, the only thing I can be wrong on is the timing. But when you look at the numbers, when you see the decline rate, and these are real, calculatable decline rates that are happening, it's very hard to maintain this. And so that's when but the Roman Empire did the same thing. The late Bronze Age, they did the same thing. We see the same processes over and over. This is just on a much more global scale. The way I look at how things are going to unfold, the biggest problems are going to happen and we're seeing it, to the areas and the countries that are the most reliant on energy imports. Europe is most reliant on natural gas imports. Asia is number 2. Asia is most reliant on oil imports. Europe is number 2. And so even though people think China is this growing economy, they got the Belt Road Initiative and the BRICS, and that's all true. I don't disagree, I don't disagree with that. China is going to have the same problems the rest of the world is. Their growth has come from a lot of imports of energy. Well, if the imports of energy are going to decline, well, so is the Chinese miracle. And the Belt and Road Initiative is not going to last. I mean, I put out the statistic that just mind boggles. In the last 3 years, China has produced more cement, concrete, than the United States has done in the last 100. Think about that. And so they have went from an agrarian economy to a high-tech metropolis in 2.5 decades, which took Europe and the United States almost 100 years to do. They did it in 2025. Well, you know what? You go up fast, you come down fast. And so you're right, the rest of the world is going to get into trouble. And I would say this, the countries that are the net exporters of energy and goods are going to survive longer than those who are the net importers or highly reliant on energy. And we're seeing that problems right now. A lot of third world countries like Sri Lanka, the prices of food, it just gets worse. It just gets worse as time goes on. So like Russia, they export 2/3 of their oil. So they're going to survive longer. Canada will probably do well because they export a lot of their oil. So it's going to play out differently, but those currencies and those countries that are net energy exporters and goods exporters, their currencies are going to hold up better than those countries that are major importers. And we're going to get back to the old-fashioned way of doing things based on real things, and that's coming.